Let's go back to Suzanne O'Halloran. She joins me now from the newsroom with more on how the market's been reacting to this. Suzanne?
Thanks, Mark. You know, it appears traders are taking this quake in stride. I want to point out the Dow Jones Industrial Average. We are marching back up to pretty much where we were before when we got those headlines about that 5.8 magnitude quake in Virginia. Another important point to point out when we look at the markets, we have 10 of the 10 S&P sectors maintaining their gains. Energy stocks still are your #1 performer. They have been for most of the day. That's very encouraging. We did not see investors do a massive shift of asset rotation on those headlines. Again, they are taking these headlines, which are clearly very serious, in stride here as we continue to report the details. I also just want to mention the price of oil as well, because we are continuing to see oil pick up steam. We have oil up at $85, up over $1. So again, investors comfortable taking on those risky assets despite headlines of that quake. And we are continuing to cover some headlines, Mark, that some buildings in the Philadelphia area, for example, are being evacuated as a safety precaution. Another thing I want to point out to just give you a sense of risk in the market is the price of gold. Gold actually picking up even more selling when we look at a gold chart. Gold actually down $44 at $18.47. Again, as we look at gold on days when there's a lot of volatility, we tend to see some buying in a safer asset like gold. We are not seeing that today. And in fact, the selling continued for gold after we got headlines of that quake. And every time we talk about fear, especially over the past few weeks, we like to give a quick check on the VIX index because this measures fear as well. We're not seeing a whole lot of movement in the VIX as well. The VIX basically was bouncing along the bottom today. We're at 39. We're still there. We saw a modest tick higher, Mark, when we got those headlines about the quake, but no real action. Investors should take comfort in that we are not seeing any type of panic selling, if you will. Investors, again, taking the news of the earthquake on the East Coast, which, as you mentioned, very unusual. I happened to be on the phone with a contact over at Lightspeed Trading. They, too, were surprised. Their building in Times Square actually shook. But again, Mark, the market's marching back to the highs of the day. That is good news and comforting for those investors. Mark.
Suzanne O'Halloran joining me from the newsroom. Suzanne, thanks. Let's go to our senior markets correspondent, Julie Hyman. Julie Hyman joins me with a guest on the phone. Julie?
That's right. I hooked up with Hampton Bargatze. He's a sales manager in fixed income at BB&T down in Richmond. We've been talking to folks all over the East Coast, but Richmond, obviously the closest large city to where this quake actually took place, about 40 miles west of Richmond, Virginia. Hampton, thank you so much for talking to us. Talk to me about what happened, what it was like down there, how much shaking did you feel, and did you realize it was an earthquake right away?
We just felt the building shake for about 30 seconds, and couldn't quite figure it out until it was pretty much done, and probably more drama after the fact than during the actual quake.
And did you all evacuate the building? Did you get any direction from the building manager?
No, we had some people walking out, but no evacuation.
Do you see a lot of people on the streets there in Richmond, or do people seem concerned that there may be aftershocks at all?
We're kind of looking. We don't really look at the center of the city. We're kind of look out over the James River. There are some people out on the front side of our building, but we're kind of. We're not really seeing a whole lot from where we stand right now.
And you all are in the sort of the newer part of Richmond. You're in a newer building, correct, as opposed to sort of the older part of Richmond, the Capitol building, et cetera, which potentially might not be as prepared for something like this.
Correct.
So are you hearing anything there locally about what may be going on in other parts of the city?
We haven't heard anything. We've kind of get some phone calls from friends and family, but have been nothing. We haven't heard of any real problems anywhere or any damage anywhere.
I'm also curious about what's been going on with the phone lines. We've had some reports of phone lines being tied up, either mobile or in some cases the landlines. As you say, is a lot of people have been calling around to try and figure out if everybody's okay. What's been your experience on that front?
We've had no issues here.
And you guys obviously are on a landline. That's how I reached you as well. So is it, I mean, at the end of the day, is it pretty much business as usual? Have you resumed what you were doing before?
We are back to business as usual. Still fielding some phone calls of people checking on us, but yeah, we are right back to normal.
Well, Hampton, thank you so much for your time again. He is down there in Richmond at the BB&T building. Hampton Bargatze is a sales manager in fixed income at BB&T. Mark?
Julie, thanks so much. Let's get right back to the floor of the New York Stock Exchange. Matt Miller is standing by with a guest. Matt?
Hey, Mark, thanks. I want to just point out real quickly that we have bounced back to sort of pre-earthquake levels here on the floor. A gain of about 205 points in the Dow, 11,059. The S&P back up through that 1145 level that technical analysts were watching as an upper range. Now we're looking at 1148, 1149 there, a gain of about 2.2%. So real rally on the S&P. And the Nasdaq, the big gainer at 3%, with 2415 being the level. A lot of the tech stocks are gaining today. Apple, Microsoft, IBM, you name it, JDS, Uniphase, Amazon, they're up across the board. I'm standing here with the trader, Todd Schoenberger from Land Colt Trading, normally based in Philadelphia, and you said guys in your office in Philly felt this as well.
That's right. I was having lunch, and I got a couple of calls, and that's how I heard the news first. Then I looked it up, and I heard it was a 5.8, 5.9 out of Virginia. So it definitely impacted our offices in Philadelphia. We're in Center City, right next to City Hall, around 2 South Broad, and that building felt it, and that's a 30-story building.
So then walking back from getting your slice of pizza here in New York, down William Street, you saw that people were starting to flood out of the buildings down in the financial district here, evacuated, but obviously it hasn't affected trading at all. I mean, here on the New York Stock Exchange, everything is running smoothly, with the exception of probably a flurry of emails about the earthquake.
Well, it impacted us at the beginning, obviously. There was a concern there, wondering if the NYSE was going to be evacuated, so traders were obviously scurrying as far as getting their orders in, what they needed to do. However, now we've rebounded right now, as clearly this thing has been taken care of, whatever it was, whatever caused it, and there is obviously no sudden damage that we need to worry about here on the floor. So trading is going as business as usual.
Definitely, I was talking with officials in charge of the systems here at the NYSE, and they're saying everything's running smoothly, everything's in perfect working order. They did not evacuate the 6th and 17th floors, had been reported earlier, so everything here is fine. Let me ask you about trading in general, because it's a fairly sizable rally now. 200-point gain on the Dow, 2% on the S&P. But why? Are people expecting something from Ben Bernanke?
That's one part. Libya is another part. It's a new facelift for the Middle East, so we have to consider that. Also, keep something in mind. Yesterday, we closed where we were 2 weeks ago. So now, from a technical standpoint, you were really looking for that pop at the open right now. We clearly have been there all day. But the real hint right now is looking for something out of Bernanke on Friday. If we don't see it, you may want to end up thinking of sewing into this strength. We've been short. We're still short. And we're not going to start covering now because we don't have to just yet. But we think that Friday is going to be a big disappointment for investors.
You think, and everyone I'm talking to on the floor lately has been saying, look, we're not going to get anything from Bernanke on Friday. And yet people say this rally is mainly due to that, right? So what do you think we'll actually hear from the chairman?
Look, he can't say very much right now because the macroeconomic data is not poor enough right now for Congress to make a move. Remember, Congress and the FOMC are very reactive, not proactive. So they're not going to go right out and start doing something unless they need to be. And keep in mind, we have to be seriously stuck in quicksand. I mean, you're looking at a real recession taking place before Congress is going to let the chairman and the FOMC do any type of quantitative easing.
Do you see that real recession taking place? I mean, you are short right now, right? You're going to go short into the Jackson Hole speech. Do you see the U.S. economy contracting?
The Rich Amarone, one of your economists, brought up a great point. You look back in 1948, the very first year that the government could come out with a gross domestic product reading. Anytime the year-over-year number dipped below 2%, this country always ends up in a recession. It is a 100% perfect barometer. Right now, it's at 1.6%.
What do you think, though, Todd, about the markets? I was talking to Mark Newton over here at Grey Wolf Execution, and he was saying there hasn't been a down year for the markets in a pre-election year since 1939. So things would have to be very bad for us to get a down year in the market this year.
And historically speaking, the third year of a presidential term is always the best year, especially in the first term. So you have to think that, yes, we should be up 19% on average if you just look back at the last 50 years. We're not even close to that right now. But this is not the typical time, a normal period right now. So you have to wonder, what is the Fed going to do? Remember, he already promised us a zero interest rates for 2 years. There's not a lot he can do. Last summer, we were fighting deflation. Now you have inflation concerns. So what do? You got to pop up rates if you want to fight that. But yet again, if he starts printing money, now you have more of an inflation risk.
Hands are a little bit tied.
I would say so.
Todd, thanks so much for joining us. Todd Schoenberger from Land Colt Trading, joining us on the floor. So, Mark, obviously, the earthquake has caused some commotion. People are talking about it a lot. There's a lot of people down here in the financial districts out in the street. But it hasn't stopped trading, and it hasn't held us back from a 2% rally here.